Hello and welcome. You're watching Business Plus. I'm Shweta Kothari. We're bringing you stories from the world of business policy and economy. First up, let's understand how markets performed today. After a day of gains, Indian markets once again slipped into the negative territory. With today's close, Nifty has ended in red in 3 out of last 5 sessions. Suyash is here with me. Also joining us is Amit Gupta, who's the founder of Fintrekk Capital. Suyash, I want to come to you first. How did the markets perform?
So, Shweta, markets failed to hold on to morning gains and continued to edge lower through the session at close. Sensex was down about 440 points to end at 66,266 levels. The 30-share index touched an intraday high of 66,984 and an intraday low of 66,060. Meanwhile, Nifty ended 0.6% lower at 19,659 levels. It touched an intraday high of 19,867 and an intraday low of 19,603. Now, the broader markets outperformed benchmarks. Nifty Midcap 100 was up 0.27% at close, while the Nifty Small Cap 100 ended on a flat basis.
All right, and what are the sectors and stocks that you were tracking this afternoon?
So, Shweta, auto, oil and gas, bank and FMCG indices ended with gains, with losses of 0.5 to 1%. On the other side, pharma index was up 3% and realty index gained about 2%. Among individual stocks, Cipla was a top gainer in the Nifty pack.
That's also Cipla's results came out
Cipla's
yesterday.
Results were outstanding, and also it has announced it's selling its stake to Blackstone. So that there were 2 major triggers for the company. It was up about 10%. Sun Pharma was another pharma stock which was among the top Nifty gainers. It was up about 2.3%, followed by DV's Lab, which was up 2%. On the other side, auto stocks like Mahindra and Mahindra were under pressure. It was down about 6%, followed by Tech Mahindra, which disappointed streets with its results yesterday, was down about 3.6%.
All right, those of course are top gainers and losers on the Lal Street. Let's quickly understand some of the major quarterly earnings that were announced today, and starting with Nestle. Amit, I want to come to you directly. Net profit rose 36% for the second quarter of the calendar year for Nestle, but the shares dropped over 3%. How do you explain this conundrum?
Yeah, so I think they increased the prices for a lot of their confectionery items because of the higher commodity prices last year. So I think on a base-on-base effect, is taking place. Year-on-year effect is taking place. And I think, they have also changed the financial reporting style. They were earlier following calendar year, and from now on they are following financial year, which is April to March quarter. So I think there is some sort of confusion which happened, in the intraday markets today because of that. But I feel that because of the rural stress which we are seeing in the markets, in the rural market parts of the India, the Nestle is sort of a little weak on that front. The urban part is doing well with Maggi and Kit Kat and etc. As far as the rural stress, once that goes out because of a decent monsoon, then I think stock can make a comeback, probably later in the quarter.
All right, and if you look at FMCG earnings so far, HUL, Nestle and other major players, it's been a mixed bag. Any particular cues and trends that you're picking up for the quarter gone by?
Yeah, so FMCG has been a mixed bag. Most of the FMCG, you can probably divide it into 2 parts. I'm not talking about like the discretionary consumption. I'm focusing only on the FMCG part. So HUL results were actually quite disappointing with respect to confectionery items, with respect to the basic staples items. They have cut their guidance also, and they still feel that rising commodity prices will hit them. And on the other hand, we have something like a Colgate, which has actually given a higher volume guidance, for the coming quarters, and that was actually up about 5% today. So I think it's a mixed bag. There are companies like Nestle and Colgate which are doing well despite the rural market slowing down. But at the same time, things like HUL, they are struggling a little bit because of the higher commodity prices.
All right, let's quickly run our audiences through numbers as they stand from Nestle's kitty. How are numbers looking like?
So Shweta, the numbers were above the street's estimates. Nestle reported a consolidated a jump, a 36.8% year-on-year jump in consolidated net profit at 698.34 crores versus 510 crore in the previous quarter of the previous fiscal. And revenue jumped about 15%. Meanwhile, EBITDA was up 24.7% and margin improved by 170 basis points. Now, one of the things that the management of management of Nestle said was that they that in this particular quarter, they had a broad-based growth across all segments, and domestic sales improved by about 14.6%. Now they saw double-digit growth in Maggi. Its milk products, nutrition-based products delivered a strong double-digit growth despite inflationary presence. But I think what disappointed the street was, as was in the case of HUL, that the volume growth was below the estimates of the street.
Okay, volume growth was below estimates, and that perhaps could have been a disappointment. Stock closed slightly lower, and obviously investors not very happy with a sort of mixed reaction that is coming in as to whether these are quarterly results for the calendar year or quarterly results for financial year. All of that and more, of course, weighing in on Nestle's stock. But another interesting stock that we continue to track is that of ACC. ACC, the cement major, has also posted a profit of 105% at 466 crores. Stock was up about 1.2%. Let's quickly go to Amit. Amit, ACC results in line with expectation, also perhaps giving us a sense of how the cement industry is performing, and particularly good news for Adani.
Yeah, actually, I haven't seen the results in details, but I've just seen the headlines before we started. So yeah, I mean, the ACC results were a little bit surprised. Actually, it's above the estimates. Recorded, highest ever revenue of almost 5,200 crores. PAT, jumped more than 100%, driven by that higher revenue. So yeah, I mean, things probably look good on the headline numbers. The details need to be seen, why and what pushed the revenue so higher, and what type of construction has, sort of pushed that number so high.
Amit, let's run these numbers for our viewers once. My colleague here has the numbers with him, and I'll also read out statements that have come in from ACC so far. So that will give us a sense of what worked for ACC.
So net profit, Shweta, more than doubled from 227 crore in Q1 FY23 to 466.1 crore in Q1 FY24. Now revenue also jumped by about 16% from 4,468 crore to 5,201 crore. EBITDA improved by 81% year on year from 425.8 crores to 770.9 crores. Meanwhile, margin saw a 530 basis point jump to 14.8 crore from 9.5%.
All right.
14.8% to 9.5%.
14.8.
Good set of numbers. Great set of numbers coming
Great set
from
of numbers.
ACC.
105% increase in PAT is exceptional, and in fact beats market expectations at this point.
And
Ajay
you even
Kapoor,
saw it in the
there?
stock's performance. It was trading with moderate gains, and we saw a sharp spike in the last 5-10 minutes, and right as the results came out.
Okay, so a sharp increase in stock prices, and hopefully some of it will be seen tomorrow because the result came out later, just before the markets were closing. But Ajay Kapoor, who's the whole-time director and CEO of ACC, said that the growth was driven primarily by robust demand for high-quality cement products across all market, as well as continuous effort by the company to optimize operations and reduce environmental impact. Not sure about environmental impact, I can't vouch for that, but clearly demand for high-quality cement on the rise, Amit.
Yes, I think generally, what we have seen and evidence on the data is that, in a pre-election year, there is a huge rush to complete projects. And that's what we are seeing happening right now. And if the monsoon is, decent and we don't get too much damage, as far as the construction activities are concerned, then there will be, very good tailwinds from rural demand also coming in later in this quarter. So FY24, I think overall H2 really looks very strong in terms of demand growth. So demand might go down a little bit, closer to the elections. But I think 6 months into the elections, we could see a good demand front happening. So I'm not too worried about the demand front. It's just that in a cement cycle there are external parameters like fuel cost, etc., which sort of plays a joker in the pack kind of thing. In fact, I'm actually looking at the details of ACC, and the fuel cost is down by about 15% for the company year on year. Remember last year we had Russia-Ukraine war, so the fuel cost really went up. The crude went up to $130. So I think there is a base effect here where the cost has come down for 15% year on a year-to-year basis. So the operational efficiency improvement has helped them optimize cost and push revenues higher.
All right, operational efficiency has worked for ACC. JK Lakshmi Cement results are also awaited, are expected to come out today, which will give us a picture of how cement consumption was in the first quarter of the year, and also give us a sense of how infra development and what is sort of impetus towards infrastructure development, and hence the consumption of cement industry, how that pans out. We'll be able to get a clearer picture by tomorrow. But Indian Bank just came out with its results. Run us through the numbers.
So the public sector bank has reported a 40.8% year-on-year rise in its net profit at 1708 crore for the April to June quarter. Now the gross non-performing asset ratio declined to 5.47% from 8.13%, and net non-performing asset ratio declined to 0.7% from 2.21%. So we are seeing a great 40% rise in net profits, and the asset quality has improved significantly for the bank, as has been the case with most public sector banks, Shweta.
Absolutely. Public sector banks and private sector banks reporting some very robust numbers. What is it indicating to you, Amit? What is the trend line here?
It's continuing the trend of the last, almost 4 quarters now. The asset quality is, pretty much improved. There are no overhanging big accounts which can turn into NPAs. I think there was some sort of, issue which propped up because of future retail a couple of months ago. But apart from that, we are not seeing any asset quality issues in general in PSU banks. And remember, all the B2G projects, a lot of lending of the PSU banks happen to government companies, and all the government companies, whether it is in defense space, whether it is in railway space, they are getting big orders, ahead of elections, whether it is state or general elections. So I think the lending is good, credit growth is good, the asset quality is under control. There are no overhanging NPA issues at this point of time. So yeah, I mean, most of that good things are reflecting in the earnings now, not just for the Indian bank, but otherwise also.
All right, good things are in order for banks and for NBFCs as well. Bajaj Finserv results are out as well. They were out about 2 to 3 hours ago. Let's quickly run through some of these numbers. PAT was up about 48% year on year to close at 1943 crore. Revenue jumped 47%. Good numbers, Suyash.
Great numbers, and also along with Bajaj Finance, which came out with a healthy set of numbers yesterday. Now all subsidiaries of Bajaj Finserv have helped it report an all-time high quarterly profit. So Bajaj Finserv numbers, if we just quickly run through it, a 48.4% year-on-year jump in consolidated net profit to 1942.63 crores. Revenue from operations rose almost 47% year-on-year to 23,280 crore rupees, Shweta. So a good set of numbers coming in from Bajaj Finserv. And the asset under management stood at about 2.7 lakh crore, up 32% from the year ago period.
All right. So all in all, I haven't seen a sector so far that's disappointed, and bank especially has stood out. The banking sector has stood out. What is your position on banking stocks at the moment, Amit, before I let you go?
So there are no surprises. That's a good part about all the banking stock results, at least so far, whatever has been declared. So my sense is, the common thread is that most of them are saying that the NIMs have sort of peaked, and there is very little chance of, going, increasing their NIMs, given that we are at the end of the rate hike cycle. I mean, I think the banks will continue to do well, going forward. I just don't see a point of them getting re-rated as far as our analyst terminology is concerned. So they can continue to be a good compounder. They can even lead markets, in the short term, given the expensive parts in other markets, other pockets of the market. It's a part of the market which is very huge as far as the percentage is concerned. Almost 35-37% is in the financials. So it can do well. It can lead the market, but I don't see a re-rating happening in the financial sectors, given we are at the end of the rate hike cycle.
All right, Amit. Appreciate you taking time out this afternoon and for joining us with all those details. We'll of course keep tracking all the earnings as and when they come out, and we'll bring you all the updates at market close.